Hello again and welcome to our Tuesday, September 30th forecast for the trading session. I have the economic calendar in front of you as per usual. First thing that I see of major significance will be the German unemployment numbers, expected to lose 2,000 actually, and the rate following as well, anticipated to be at 6.7. This of course is a mover of the euro and the DAX, and can have a little bit of a knock-on effect in other indices around Europe, as Germany is such a large driver of the European economy. That being said, I would anticipate movement in the euro and the DAX, especially if we get a better than anticipated number. That probably would shock the market a little bit. GDP year over year comes out for the United Kingdom a little later, and it is anticipated to be 3.2%, as you can see. GDP quarter over quarter at 0.8%. Both are big movers of the FTSE and the British pound, probably contained to basically those particular markets. CPI out of Europe anticipated year over year, a preliminary number to be at 0.3. Going later in the day, you can see that there isn't a whole lot really until we get to Canada, with the GDP month over month anticipated to be 0.2%. Consumer confidence does come out the United States, 92.5. Truthfully, this is going to move maybe the stock markets in the US, although it is listed as a high impact type of statement. We don't really anticipate it to move the markets too much during the session. We believe that the consumer confidence isn't quite what the market is paying attention to at the moment. And looking at those U.S. stock markets, you can see that we are seeing a little bit of support here during the session after a dip on Monday. It looks like we're going to form a hammer, and that of course is a positive sign. We have been calling for a bounce here soon, more or less just consolidation to about 2020. Our opinion has not changed. To break above the highs from both Friday and Monday has us buying calls and aiming for the 2,000 level. No interest in buying puts at this moment in time. Consumer confidence could help this market go a little higher, but truthfully, it looks like it's setting up to do this anyways. The DAX, as you can see, has fallen, but has found support at the 9,400 level again. It's an area that we had anticipated being supportive, and that's really what it looks like we've got. So with that, we are bullish. We want to buy calls, especially if the German unemployment numbers come out a little better than anticipated. That really could get the market moving to the upside. You can see that the euro is trying to bounce a bit during the session here on Monday, but has given up some of the gains at about 127. Still anticipate this market going to 125, and as a result, I believe that buying puts every time we rally on short-term charts should be the way to go going forward. And finally, looking at that FTSE that we had talked about earlier in the video, it looks like we're forming a hammer for the day, so I think we're getting ready to bounce. Above 66.60 is a buying opportunity, heading to about 67.20 via calls. Puts, I'm not interested in. I believe that 6,600 and 65.50 or so below are both supportive levels. I think the market's ready to bounce, so I am definitely looking at buying calls in the FTSE. And with that, I've taken a look at the Tuesday, September 30th trading session.